Understanding key currencies, importance and examples. A key currency plays a crucial role in the world of international finance and trade. It refers to a currency that remains stable, does not experience significant fluctuations, and serves as a foundation for exchange rates globally. Key currencies are utilized for international transactions, influencing the valuation of other currencies, and often serve as the benchmark for pricing various commodities. This article delves deeper into the concept of key currencies, their significance, the dynamics of currency pegs, and provides examples of key currencies that dominate the financial landscape. What makes a currency key? Key currencies hold specific characteristics that distinguish them from other currencies. 1. Stability. Key currencies exhibit minimal fluctuations, providing a reliable medium for international trade. 2. Global acceptance. They are widely accepted and utilized in global commerce, which reinforces their demand. 3. Strong economic backing. These currencies usually originate from countries with robust economies, stable political systems, and active participation in the global market. The stability and trust associated with key currencies make them critical for international businesses, investors, and central banks. The role of key currencies in global trade. Key currencies serve as reference values in international commerce. They facilitate the process of foreign exchange, forex, transactions, which involve the conversion of one currency into another for trade purposes. Exchange rates indicate the price of one nation's currency relative to another, impacting the costs of exports and imports. Reserve currencies. Many national central banks hold key currencies as reserve currencies. A reserve currency aids nations in supporting investments. Countries can establish trust within international financial systems. Completing international transactions. It streamlines processes for entities engaged in global trade. Paying international debt obligations. Reserve currencies provide necessary liquidity for nations to meet their financial commitments. Key currencies are also tied to the pricing of major commodities like oil and gold. Since these commodities are often priced in key currencies, nations must hold these to trade efficiently. Currency pegging, connecting economies. In a bid to stabilize their economies, countries with weaker economic standings often peg their currencies to key currencies. This trading practice is known as currency pegging, which allows these nations to enhance economic stability. By aligning with a stable currency, they can reduce exchange rate volatility. Boost investor confidence. A pegged currency often instills trust in investors regarding the economic stability of that nation. However, while pegging a currency helps facilitate trade and investment, it can also limit monetary policy flexibility, restricting a country's ability to respond to domestic economic conditions. Examples of key currencies. The composition of key currencies can be fluid, but some, recognized for their stability and widespread use, include 1. US dollar, USD, the most widely used currency globally. It serves as the primary reserve currency. 2. Euro, the second most popular currency. It unites multiple European Union nations in a single currency system. 3. British pound, GBP, an old and trusted currency. It remains significant in international transactions. 4. Japanese yen, JPY, known for its stability. The yen is commonly used in international trade. 5. Canadian dollar, CAD, often utilized in commodity trading, due to Canada's vast natural resources. 6. Swiss franc, CHF, known for its stability. It is a safe haven currency during times of market turbulence. 7. Mexican peso, MXN, the most traded currency in Latin America. It also serves a significant role in forex markets. Emerging contenders. Other currencies, such as the Chinese yuan, CNY, are increasingly vying for key currency status. As China's economy continues to grow in global importance, the yuan's influence on trade and finance is expected to rise. Efforts by the Chinese government to internationalize the yuan aim to establish it as a stable alternative or competitor to existing key currencies. Conclusion. Key currencies play an indispensable role in the global financial ecosystem. Their stability and widespread acceptance make them essential for international trade, investment, and financial reporting. While the US dollar and the euro currently dominate as key currencies, the landscape may evolve with emerging economies vying for recognition. Understanding these currencies and their functions is paramount for anyone involved in global commerce or finance.